You know, one of the things as we record this show in September of 25 is this idea of the big, beautiful bill, or whatever it was called, and this notion that Social Security taxes were going to be eliminated or significantly decreased. Now, like with any passage of any bill, first of all, let me say this. Let's put this graph up, Aaron. This is a graph we show all the time that deals with tax brackets, but notice the headline. The more you make, the more they take. Folks, almost all tax laws have what's called phase-outs. In other words, the more money you take, even as we're going to see with this big, beautiful bill and the Social Security so-called tax savings, the more likely you are to not benefit from these savings. Again, the more you make, the more they take. And you're getting ready to see this is what happened with this big, beautiful bill. So let's kind of look at the basics of Social Security. First of all, let's imagine that a husband and wife, he has $36,000 a year in Social Security. Maybe that was his full retirement benefit. His wife took half of his in this example. And let's say they had no other income. That was it. The question is, will there be any taxes? The answer is no. Now, again, this gets very complicated. We have 2 tax certified people on staff. We answer all these questions for our clients. But in general, in this extreme example, if all they had was Social Security income, there would be no taxes. In fact, they wouldn't even really need to file a tax return. But what happens in the real world, especially for all of you out there with those tax-infested 401ks and IRAs that have yet to be taxed? Remember all those tax savings those things were supposed to give you? How does this have a rippling effect on things like Social Security taxes? Well, now we got to go to a complicated rule called the provisional income. Put this up, Aaron. There's another goofy tax deal. Now, the provisional tax income is dealing with Social Security taxes. And notice what portion of taxes could be taxed on Social Security. Either 0% of it, 50% of it, or 85% of it. Now, what's interesting, while they index Social Security for inflation, these provisional incomes have not been indexed for inflation for many years, meaning actually more people are falling into the higher tax brackets of Social Security. I know this gets confusing, folks. I didn't write the laws. I'm just trying to do my best to explain them. But here's the real world. Okay, first of all, let's go over these new big, beautiful bills. First of all, the maximum deduction it's adding to the standard deduction is $6,000 per person. That's all. So let's say you're married filing jointly. The standard deduction is $33,000. That means you will add $12,000 of a deduction. Not bad, but only if you make under $175,000, because then it gets phased out. For joint filers over $175,000, this thing gets to be nothing. And then if you're single, it's only $75,000. So a lot of people will not be eligible for this deduction. And here's the other problem. Again, let's say you've got $1 million 401k or IRA and you haven't needed the money and you're just letting the thing compound. You keep forgetting it's taxed. Not only is it going to be taxed, not only if you pull out a bunch, the more you make, the more you take, they take, et cetera, et cetera. It also could tax your Social Security. This came up the other day. Gentleman came in, I'm just changing the names to protect the innocent. He had $1 million IRA. He had watched a YouTube video to convert, okay, to a Roth, okay. Watch these YouTube videos, folks. I don't know who all these people are. Anybody can start a YouTube channel. We've been doing this. I've been in this business 41 years. I have over 20,000 people I've met. We have over 3,500 clients. Most of them are retired. This is what we do day in and day out. But the problem was this $200,000, not only was it going to be fully taxable, and not only do you get IRMA and all this other stuff it was going to affect on his Medicare premiums, but basically now every bit up to 85%, put this provisional bracket back up, Aaron, 85% of this Social Security that was tax-free now has to go on his tax return. And of course, with that amount of money, he's not going to get any of this big, beautiful bill deduction. It's just going to be the standard $33,000 standard deduction. So folks, if this sounds confusing, if you're sitting there in the dark about this stuff, we need to talk. We understand retirement. We understand tax planning. So if you'd like a free second opinion on your situation in retirement, log on right now to TonyWalkerFinancial.com. Click on that Let's Get Started. Let's arrange a free phone call to see if we can help. And if we can, we're going to be meeting in person to discuss your personal situation.
Thanks for watching. We hope you enjoyed that video. If you'd like, check out these other clips. And be sure to hit that like button and that subscribe button for more videos.